The dispute between the United States and Canada has been averted, at least for the next month, but uncertainty continues to hang over the state of trade and Canada's economy. The tariffs being threatened by U.S. President Donald Trump were paused after an agreement was reached over border security. But what happens next? Here with a closer look is Derek Burleton, Vice President and Deputy Chief Economist at TD. Derek, thanks for joining us. I'm going to kind of go right to the bottom line here. You're in the business of trying to forecast what's going to happen with the Canadian economy. So what are you looking at right now when you're looking ahead to say what you think might happen?
Well, we're doing more scenario analysis than we've ever done, Kim. It reminds me a little bit of the pandemic where there was just so much uncertainty and you'd be running various scenarios. Clearly I feel a little better than I did a few days ago. The fact is that 1 month stay, I think is good. Hopefully cooler minds will prevail. But we still need to think about the what ifs. And, I am concerned that in a month's time, either tariffs will be implemented or, maybe they're implemented at a reduced rate, which would still cause some economic pain in Canada. Or maybe they're pushed back, but still that cloud of uncertainty is going to hang. So I think is probably the most likely scenario. We're getting ready. I mean, you think about what if Trump does eventually pull the trigger on such deep tariffs. And so we've been running scenarios already, as mentioned on it. It clearly would inflict some pretty big pain, stagflationary pain on both sides of the border. One thing that I do think that some of these really scary models, and I'm not belittling the impacts, if it were to hang on for a couple of quarters, Canada would be in recession, but there will be some pretty significant offsets to the pain. The Canadian dollar would be lower. I think, certainly a lot of fiscal stimulus. Governments are priming the pump, and I know the federal government's in prorogue right now, but still would have some near-term tools and would likely follow it up with significant stimulus. And then the Bank of Canada would cut rates even faster. So at least that would help the adjustment. But, I am clearly concerned that, these tariffs are going to overhang. And I think that's the last thing I would add is that, even if we don't build in big tariffs into our upcoming baseline forecast in March, you've got to take into account the impact of uncertainty. Businesses will be looking at their investments. If they're a U.S. Company that's invested in Canada, and with this uncertainty overhanging, you're going to get an impact on investments. So all things equal would lead to a weaker Canadian economic outlook.
Can I ask, when you think about the conversations that have come out of this, given that cloud of uncertainty, lots of things are being talked about in terms of, finding other markets other than our obviously geographically situated neighbor. How realistic is that? Because these supply chains have taken decades to build. Is that a reasonable thing to expect, in the short term?
Yeah, I mean, it's as you say, it's not something that can happen overnight. I mean, the world economy is not exactly booming, and as there may be tariffs on other regions of the world holding back global growth. So it makes it a little bit tougher world to diversify. And really, Kim, it's going to come down to what happens, within the North American free trade market. If ultimately the end goal of the administration is to negotiate a new deal, which again, seems like a reasonably high outcome, then that would defer any imperative to diversify markets. But to the extent that free trade in North America isn't going to exist nearly to the same extent, that would push business to sort of that imperative to diversify. But look, geography really supports Canada-U.S. trade and Mexico. You start looking at further away markets, it does become more challenging, no doubt.
What about the interprovincial side of things, stimulating more trade between the provinces, or even, big projects? We've heard a lot about, pipelines. Could we see some, expediting of things that have historically taken a little longer to get done?
Yeah, absolutely. Those are could be some pretty good offsets to the challenge. The fact of the matter is interprovincial trade in Canada has shrunk from, I think at the peak it was 55% of total trade, including international, back in the mid-'80s. It's now shrunk to about a third. So, really that, again, it speaks to just the proximity of that big market south of the border and how much trade has flowed north-south rather than east-west. And but I do see, big opportunities to at least offset some of the pain over the medium to longer term through knocking down, interprovincial trade barriers. And one solution I've heard that kind of resonates would be the 10-10-10 solution, where all provinces would have to come up with all 10 provinces, 10 ideas within 10 months to reduce regulatory compliance burdens, trade burdens, and that hopefully would kind of kickstart things because it's really been stuck. And to your point about commodity markets, that really is an area internationally that Canada could continue to diversify beyond, say, just Trans Mountain. A lot of our critical minerals, metals, energy is a commodity that I think is more conducive than, say, manufacturing goods with cheaper markets that could really help. So, if we can knock down the red tape, that certainly would provide a real impetus on that front.
Derek, I've only got about 30 seconds, but I need to ask you, it's what everybody's asking. The loonie, we're at, 21, 22, 23-year low. What do you see? Where do you see it going now?
Well, it did bounce back a bit, but after the 1 month pause. But, I think, under one of those tariff scenarios we were running where you got 25% and 10% on energy, one could have easily seen the thing, fall to 65 US cents or even lower than that. It's been as low as 62 US cents. I think under this pause, a little bit of stability, but it's going to be very volatile. Every time, the administration suggests something, indicates something, I expect, a fair amount of volatility in the currency. I think, again, overall, with some of these risks overhanging, I wouldn't expect any major outbreak of the Canadian dollar anytime soon, probably remaining below 70 US cents, even without the imposition of tariffs.